There is a big difference between buying property and investing in property. Buying is simple. You pick what you like and you pay for it. But investing? That's about understanding risk, modeling returns, and making sure your money works harder than you do. Real estate can absolutely be a powerful way to build income and long-term value, but only if you treat it like a business, not a shopping trip. And that starts with structure and data, not emotions or guesswork. An interesting part, 80% of the projects fail our scoring exercise. Hi, I'm Artem, co-founder of Insight Estate. We help investors make smarter real estate decisions using real data, clear modeling, and a strategy-first approach. And today, I walk you through how our system works, the same approach that helps our clients avoid costly mistakes and make rational, well-informed investment decisions. If you believe that property investing should be based on numbers, not marketing promises, make sure to like this video and subscribe to the channel. We share real strategies and real case studies every week. The typical investor funnel. When people start thinking about investing in real estate, they're actually going through a long decision process, even if they don't realize it. First, there is the basic question: how much capital do I have to invest? Then, what's my goal? Steady income, long-term growth, or maybe a bit of both? Next comes your risk tolerance. Are you more conservative and want something stable, or are you comfortable taking a bit more risk for higher potential returns? Then there is your time horizon. Are you planning to hold the property for a year or two, or is this a 5 or 10-year plan? Or maybe you want to pass it over to next generations. And finally, based on all of that, you choose your rental strategy: location, type of units, installment plans, type of rental, daily, monthly leases, or seasonal stays. By the way, we have a full video where we break down real estate investment strategies step by step. We go through different income models, explain how they work, and show you how to choose the one that fits your goals. If you want to dive deeper, check out the link in the description and somewhere here. The problem is, most people skip all the important steps at the top of the decision process and jump straight to the last bit. They start scrolling listings, picking apartments based on pictures, without really understanding what they need and why. And that's where a lot of mistakes happen. Why real estate needs data and not emotions. Real estate often feels safe. Property feels like a safe investment because it's something real. You can see it, you can touch it, and it doesn't just disappear. But the truth is, emotions can be very, very dangerous when you're investing. You see a beautiful beachfront villa, just like this one, and it looks incredible. But have you checked what the occupancy rate is during the low season? You hear about a project offering up to 15% return on investment. That sounds amazing, but who is actually going to manage it after the handover? You meet an agent who says prices here will double in 2 years. But have you looked at the real market data and sales statistics? Without hard numbers behind your decisions, you are not really investing, you're gambling. And that's exactly why we built a full analytics system at Insight Estate. A system that helps you make decisions with your head, not just your heart. The Insight Estate scoring system. Before we recommend any project, we run it through our scoring system. And it's not just a checklist. We use a unique analysis framework that looks at over 100 different factors for every project, from legal risks and rental yields to location dynamics and tenant appeal. Everything that can impact your returns long term. We group all these factors into 4 main pillars. First, investment security. We check the legal side, the developer's reputation, and how the construction and sales are actually progressing, not just what's promised. Second, investment potential. That means looking at value appreciation over time, real rental yields in the area, realistic occupancy rates, and how easy it will be to resell the property in a few years. Third, location quality. Is it close to beaches, schools, shopping centers, or the airport? Good location drives both rental demand and resale value. And fourth, quality of life. We look at the layouts, the amenities, the views, finishing materials, all the small things that make tenants stay longer and pay more. Each project we look at gets scored across all 4 pillars. And only the ones with strong overall scores make it into our recommendations, not just the ones with the best marketing. When you start looking at project scores, it's important to understand what you are really optimizing for. It's not just about finding the highest overall number. It's about matching the project to your rental strategy. For example, if you are focusing on short-term rentals, things like location, tourist flow, and fast payback will matter most. You want something close to beaches, shops, restaurants, places where people want to stay for a few days or weeks. If you are thinking more about long-term rentals or high-season leases, then infrastructure, the overall quality of the development, and the internal amenities become much more important. Because long-term tenants care more about their comfort, lifestyle, and convenience than just the view. How's the view, by the way? Let me show you how this scoring system works in practice using real examples from Thailand, and more specifically, Phuket. Phuket has become one of the most attractive real estate hotspots in Southeast Asia. Why? Because the numbers make sense. Tourist arrivals are growing every year, and Thailand remains one of the most open and foreigner-friendly countries in the region. You can legally own property as a foreigner, entry prices are still accessible, and you are not just investing in a lifestyle, you're investing in demand. Phuket isn't just about beaches and palm trees. It's an international resort market with daily tourist flow, remote workers, seasonal tenants, and long-stay expats, all looking for different types of rentals. And with the rise of international schools, hospitals, restaurants, co-working hubs, the island now attracts not only tourists, but residents. And here's the thing, just because it's a paradise doesn't mean every property here is a good deal. That's where scoring comes in. Let me walk you through a few real examples and show you how different types of properties in Phuket perform across our system. Let's take the project called Vega, for example. It's not a beachfront property, but it's located in a well-developed area with strong infrastructure, walkability, and great access to key spots of the island. It's pet-friendly, which is rare, and it attracts long-term tenants like digital nomads, expats, and couples staying for several months at a time. And here's why that matters. Because you are not paying a premium for the sea view, the entry price is lower, and in many cases, that means your return on investment can be actually higher. Especially when your strategy is focused on consistent long-term rental income, not chasing short-term bookings. These are the scores, and these are the scores. Not every investor is chasing beachfront or big hotel-style infrastructure. Yes, there are projects closer to the sea with full-scale resort facilities, pools, clubs, family zones, but not everyone wants that. Some people, especially remote workers, solo expats, or couples, are looking for something quieter. A place without crowds, without kids running around the pool all day, and with a more mindful atmosphere. That's exactly what Zero Bank Tao offers. It's just here, by the way. It's a compact, cozy project with a clear concept: peace, privacy, and sustainability. The developer is focused on low-carbon design, energy efficiency, and the NECA-conscious lifestyle, which is becoming increasingly important for a certain type of tenant and buyer. It's not the biggest or most luxurious project, and it's in the very early stages of construction. But if you are playing long-term and looking for growth potential in a quiet, values-driven niche, this one definitely stands out. Here are the scores, and you see that investment potential is through the roof. Higher upside and sustainability focus with a bit of more of an early-stage risk. It's a good fit if you're aiming for growth and ready to wait until construction is finished. Now, if you are looking for something more premium with strong lifestyle appeal and flexibility, Gardens of Eden is a great example and one of my favorite projects. Phuket is one of the Southeast Asia's most popular destinations for premium tourism and second homes, attracting high-income travelers, long-stay visitors, and property investors from around the globe. But while demand for high-quality real estate keeps growing, the number of truly well-designed premium projects is still limited, especially in prime locations near the beach. That's exactly where Gardens of Eden fits in. This is a beachfront project in a quiet but upscale area of Layan Beach, and it's designed for people who value comfort, privacy, and visual aesthetics. It's not just for short-term guests. It works just as well for long-stay tenants or for personal use part of the year. So, if your strategy is more hybrid, maybe a mix of rental income and some time living in the property yourself, this is the kind of project that makes sense. Here, how it scores, and you see the quality of life is 9.9. I haven't seen anything higher than that. By the way, if you want to make the whole process even easier, we've prepared something for you. A step-by-step guide where we've collected the key information you need to better understand the process, plan your actions, and see how owning your own apartment by the sea can actually be simple. If you want a clear roadmap to start your investment journey, just click the link and send me one word, guide. I will happily share it with you. Building a portfolio, not just buying a unit. One of the biggest differences between someone who just buys a property and someone who actually invests is the way they think. Buyers usually fall in love with one apartment. They see a nice view, a beautiful lobby, and that's it. Decision made on emotions. But investors don't think like that. They don't just pick a unit. They build a system. And that's exactly what we help our clients do at Insight Estate. We help you spread your investments across different types of properties, different locations, and different rental models, so they are not relying on just one idea working out. For example, instead of putting everything into one expensive unit, you could build a small, well-balanced portfolio. Start with something like Vega, a project with a lower entry point located in a developed area with high demand for long-term rentals from digital nomads and expats. Then, add a unit in Zero Bangtao, quiet, eco-conscious with early-stage upside and appeal to tenants who value privacy and sustainability. And completely mix with Laya project, a premium location near Bangtao Beach managed by a global 5-star hotel brand offering guaranteed rental income for the first 5 years. Now, you've got 3 units for the same budget in 3 different neighborhoods, serving different types of tenants with different pricing levels and rental models. That's a system. It gives you cash flow stability, risk diversification, and room for growth instead of relying on one property and hoping it works. The idea isn't just to buy what looks nice today, it's to build a portfolio that gives you cash flow now and resale options later. And every combination we recommend is based on real numbers, not guesses. And here's the thing, real investors don't just build a portfolio on gut feeling, they model everything. Before we recommend any unit, we run a full business case for the deal, built around your budget, your goals, and your timeline. We look at the incoming cash flow, expected property appreciation, realistic rental income based on local demand, and the occupancy rates. And we break down the outgoing cash flow, purchase price, fees, furnishing, management cost, taxes, everything that actually affects your returns. All of that goes into one question. How attractive is the deal as an investment? And we measure that using real metrics. Gross yield, ROI, IRR, not just sales talk. That's how real estate becomes a financial plan, not just a pretty purchase. The way people invest in real estate is changing. Smart investors don't rely on promises, they rely on numbers. And that's exactly what we do at Insight Estate. We help you build a real portfolio based on data, analysis, and clear understanding of how each property fits your strategy. If you're ready to start building your own plan that actually makes sense for your goals and your budget, just click the link in the description. You'll find a free guide we've prepared to help you get started, or you can leave a quick request and I'll personally send you a tailored selection of projects with all the numbers you need to compare and decide with confidence. Thanks for watching, and I'll see you in the next video.